Hey everyone, in this video we're going to do some good old-fashioned financial statement analysis on Lucid stock. Before you get overwhelmed, I'll let you know that I'm going to keep things simple. I'm going to simplify this process. I've already highlighted the most important things from Lucid's latest quarterly 10Q financial statement. That's the one we're going to be going through. And if you should be confused about anything at all, just ask in the comments below. I'd be happy to clarify any confusion you might have. All of my videos assume you're not a financial professional. That's why you're looking at YouTube videos for financial analysis, right? So I try to keep things as simple as possible. And if it gets too wonky, just ask about it in the comments. I'll be happy to clarify. It's very likely that other viewers probably have the same question you do. So it'll be helpful for a lot of viewers if you ask the questions in the comments section. All right, without further ado, let's get right into this.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so what I have pulled up here is Lucid's latest quarterly 10Q statement, and I've jumped straight to management discussion and analysis section. This is the section that I find most valuable out of the entire 10Q statement. This 10Q statement in particular is 181 pages. We're not going to go through all of that. I've went through all of it. I've highlighted the most prominent segments, and that's what I'm going to bring you in this relatively brief video. So as an overview, management said their focus is on in-house technology innovation, vertical integration, and a clean sheet approach to engineering and design that have led to the development of the award-winning Lucid Air. So in other words, everything is in-house. They're not outsourcing anything. They want to do everything, at least all the most important things, in-house. They might outsource telephone customer service, for example, but they're not going to outsource manufacturing. They want to do that in-house. That's a strategy. I will highlight that's a riskier strategy, right? Versus outsourcing. Some EV companies like Fisker, for example, is outsourcing. That makes it easier and less costly. However, the upside is also smaller. Just keep that in mind. Lucid says they sell vehicles directly to customers through their retail sales network and through direct online sales, including Lucid Financial Services. All right, so they're not going to go through a dealership network. They're going direct to consumers, which also has its pros and cons. One of the benefits of that is they get the information immediately, right? You know what sales are like in your sales channels. You get that information daily. The downside is you don't have this massive network of salesmen going out and selling your vehicles. And so there's pros and cons to that strategy as well. Lucid began delivering the Lucid Air to customers in October of 2021. They expect to begin production of the Lucid Gravity SUV in late 2024. If you haven't already seen videos of the Lucid Gravity SUV, it's a nice looking car. However, it's going to be expensive again. It's going to start at $80,000 according to the video that I watched about the Lucid Gravity. They're going to start pricing at $80,000. It looks beautiful, and overall Lucid's EVs are my favorite, the best looking EVs in the market, but they're expensive. They're really expensive. So they're starting with these expensive models, but it looks like their plan is to develop and manufacture progressively higher volume vehicle segments. That means they're starting at the expensive price points, and it's likely they're going to try and work their way down to lower price models. And of course, if you lower your price, you make it more affordable to more people, which increases your unit sales. That's the plan going forward, although Lucid has so far had little progress in increasing unit volume. So something you may have read about is Lucid signed a deal with Aston Martin. And here are the details of that deal. So in connection with that strategic technology arrangement, Lucid received 28.3 million shares of Aston Martin stock, and they received their first cash installment of $33 million. They'll receive remaining cash payments of $99 million phased over 3 years. Aston Martin also committed to an effective minimum spend with Lucid on powertrain components of $225 million. So this is a testament to the effectiveness of Lucid's technology development, that they've done such a good job developing their powertrain, their technology, that they were able to sell it to Aston Martin, that Aston Martin was willing to pay for it rather than Aston Martin developing it themselves. They thought this was a better opportunity for them. They thought this was a better value for them. And it's a testament to the effectiveness and the quality of Lucid's technology. All right. You've also probably heard of the backing of the Saudi Arabia government. They are major investors in Lucid stock, and they've also agreed to purchase Lucid cars. And so let's go through the details of this because this is really, really insightful. So the government of Saudi Arabia and its entities, corporate subsidiaries, and others may purchase up to 100,000 vehicles from Lucid, with a minimum purchase quantity of 50,000 vehicles and an option to purchase an additional 50,000 during a 10-year period. So in other words, they've agreed to buy 50,000 vehicles from Lucid, and they also have an option to buy 50,000 more, as if you ever need an option to buy more things, right? Do you need an option to go buy more cars? You don't, right? You can just go out and buy more cars. So it's very likely that this deal is for 50,000, not 100,000, right? But of course, Saudi Arabia backs Lucid and is a major investor, and so the 100,000 headline figure looks nicer than a 50,000. But for investors, I'd like to point you to the option, right? And that means it's going to be 50,000, most likely going to be 50,000 over 10 years. So roughly 5,000 vehicles per year the Saudi Arabian government and its subsidiaries will buy from Lucid. So that just makes its 2023 look that much worse, because if the Saudi Arabia government is buying 5,000 vehicles from Lucid, let me show you in 2023, on the full year basis, Lucid produced 8,000 and sold or delivered 6,000 vehicles. So imagine if 5,000 went to the Saudi Arabia government, Lucid only sold 1,000 vehicles to customers outside the Saudi Arabia government. That really speaks to how little customer demand there is for these Lucid cars. As nice as they look, as innovative as they are, as excellent as the technology is, at the current price point, there just isn't very much demand from customers to buy their cars. As nice as they are, I mean, I can't highlight enough how nice their cars are. It's just so expensive that people can't afford them, and the people that can afford it are choosing other options. Okay, so let's move on to management's explanation of their revenue in their most recent 3 months and the most recent 9 months. So in the most recent 3 months, revenue decreased by 57 million or 29% in the quarter that ended September 30th compared to the same period the last year. Management said this was because the decrease was primarily driven by the change in product mix, pricing, and incentives offered during the 3 months ended September 30th. So most notably pricing. You've all heard of the price wars in EVs, price cuts, and Lucid also had different ranges of their vehicle. There was a car that sells for over 200,000 and some that sold for as little as 85,000. So people were spending more, buying more of the lower priced units this year compared to last year, and so that decreased the total revenue for Lucid in the most recent quarter. Still, having revenue decline by 29% in an industry that was growing rapidly in 2023 is a troubling sign for Lucid stock investors. Right. And we will end this video with these last two comments from management. So management saying that they incurred significant personnel and overhead costs to operate their large-scale manufacturing facilities while ramping up production. In the near term, they expect their production volume of vehicles to continue to be significantly less than their manufacturing capacity. In other words, they could produce and sell a lot more than what they're actually producing and selling right now. And throughout 2023, management lowered their production target twice. Remember, they started the year at a target of around 12,000 vehicles produced. Then they lowered it to 10,000. then they lowered it to 8,500. So they lowered it several times. And even after lowering it several times, they still produce too much and they have more than they were able to deliver. And so management's saying, like, for a long time, this is going to be the case. We built up too much manufacturing capacity and customer demand is not even close to where we thought it's going to be. And so there's going to be this large gap between what we can produce and what we're actually producing, which is going to be a headwind on profitability because you're paying for those much larger capacity, but you're not producing. You're not achieving those economies in scale, and that's not going to be good news. So as a result, they recorded write-downs of 230 million and 752 million for the 3 months and 9 months ended September 30th. And that was to reduce their inventories to their net realizable values. What that means is they initially, when they were planning production, they thought they were going to produce, let's say, 10,000 units, and the average selling price is going to be 100,000 per unit. I'm just making that number up. But it turns out that they're producing maybe a certain amount, but they're not able to sell it for $100,000 per unit. The average selling price is lower than what they thought. And that difference between what they initially expected and what they're actually selling these cars for, they're taking as a write down. They're taking that as a write down. And that's causing losses because they're saying, we initially thought this is what we were going to be able to generate on this much production, but that's less than expected. So across the board in this financial statement, what's come out from Lucid is that things are worse than they initially thought when they were planning and building this business. Things are progressing a lot slower than they thought. Okay. But that doesn't mean that it's all doom and gloom, that it's over for Lucid, that they have no chance. That's not what it means. It just means that they're getting off to a much slower start than they thought. Customer demand is much less than they thought. And so it's going to be a lot tougher over the next couple of years as they ramp up. It's just going to be tougher. That's what Lucid is realizing, and that's what's revealed in these financial statements. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.